Tkeshelashvili. I represent Investor Park Asset Management. First of all, I want to let you know that I'm not intending to advise. I'm not usually good at that. So if you even lose, I'm very fine with that. So very briefly about myself. So we do bridging UK investors into Georgia private equity business, into Georgia some public sectors. And we, interestingly enough, also have Georgian entrepreneurs to invest in UK. Although, of course, the other way around is much bigger, yeah, because we have much more power. So lately we've been involved in a very interesting project, part of a fintech. And I believe most of you, or some of you, have already heard about the fintech. Yeah, it's a disrupting payments banking industry. It is disrupting the asset management industry as well. So you also heard about probably about the ROBO-ADVISE. The ROBO-ADVISE is sort of distancing yourself from the traditional asset management. So you don't have the physical person advising you anymore, and you sort of use the online tools to actually go to the risk profiling, to understand your risk profile as an investor, then be presented with the opportunities to invest in some funds. Yeah, and this is really growing. Why it is growing? Because people are increasingly distancing themselves from the so-called active strategies, yeah, and a lot of funds and the entrepreneurs are coming up with the passive strategies because they are sort of, in many aspects, sometimes much better than the active strategies. Yeah? So they offer more value, less cost. Client can understand the risk profiles better. The subjectivity is cut off from the, let's say, risk profiling project, risk profiling stage, and the client can understand its risk profiles more objectively and invest in the passive funds. So robo-advising has been picking up for quite some time. It's very big in the US, it's growing in the United Kingdom, it's growing in Europe as well. The funds are, the entrepreneurs are sort of popping up in countries like Germany, France, Italy, etc., etc. But I think what the focus of our talk today is to sort of understand what are the downsides of these robo-advisors. Beyond all the advantages, or many advantages they have over the traditional investment and traditional advising, they still have the disadvantage that they're lacking a personal touch. Yeah, and they also do not allow the investor to be actually involved in the active strategies. They do not allow the investors to be part of, let's say, or become their own portfolio managers. So. And that's why what we say, seeing the trend is, could be going to the new breed of robo-advisors, the so-called, let's say, smart investing platforms, where people actually can create their own portfolios and use very smart and intelligent tools to sort of creating the portfolios, understand the risks of every single investment and as a portfolio as a whole, actually get the passive funds, but buy these passive funds themselves, find the best suitable passive funds for themselves and create a portfolio of their own, at least for a certain portion of their investment. So, and this lies between the, let's say, the natural desire of every person to be a self-investor, like we can understand, think of the trading platforms, right? But the trading platforms are risky, you don't understand the risk inherent in the investments, you don't understand, what you're buying, etc. and also a guided investment. So there will be a tendency towards a new breed of robo-advisors where people can go to the website, go to the very advanced risk profiling, also sort of considering the human capital of the investee, and pick the passive funds, but also have an option to slightly deviate from the passive, let's say, ETFs, you know, offered on the website. So basically, it has 4 characteristics or 4 advantages. It's more complex client risk profiling. It's a predefined passive portfolios, yes, but you can also create, be a portfolio manager yourself by investing or, let's say, deviating slightly from the portfolio. And you will have a smart tool to be used to create your, let's say, bucketed investments, yeah, which is for you to understand the portfolio risk, to create your own portfolios and be more entertaining in your investments. So I think my time is up.